Hey everyone, in this video I just wanted to go over a couple of concepts that have really helped me and transformed my own trading in my trading journey. And I wanted to share these concepts with you guys, and maybe if you're kind of in that phase where I was at one time, where you're struggling to find consistency and struggling to find entries and things like that, maybe some of these concepts will help you out. I know everybody kind of clicks with their own model, and I'm just sharing the model that has clicked for me. I feel like over the past year, in various times, different pieces of the puzzle have finally kind of landed, and everything is clicking for me. I'm not saying I understand everything, but I'm really comfortable at a point now in trading where the consistency is there, the profitability is there, the win rate is there, and nowhere like it used to be. So anyway, having said that, let me just jump in and I'll explain what I'm talking about and what I do each day on the charts here. So each day that I come onto the charts, the first thing that I do is I mark up all of the higher time frame imbalances. I know a lot of people don't do that. They just like to keep their charts clean. The reason that I do that is because it helps me to see where the market could be drawing to next. Before I understood this, it was marking out previous day high, previous day low, London high, London low, things like that. And then the market would take off, and then all of a sudden it would get to a point, and then it would turn around real quick. And I'm thinking, what just happened there? Why did that occur? And now I'm seeing 90% of the time it's bouncing off a higher time frame imbalance. And so that has helped me. Here's a clear example right now. Look at this candle. This is the 10 a.m. What is this? The 10 a.m. candle that reaches up, taps into this area and then starts to come back down. And then we'll see this on the lower time frame charts. So you'll see what happened here. That was the trade that I posted earlier that I got in coming back down. But it helps me to understand where the market's possibly going, and then where's the drawn liquidity next after that point. So higher time frame imbalances are marked up. Something that's helped me with this also is I will utilize this indicator here. It's by FVG, Nephew Sam. Nothing fancy here. I turn on the charts, and then I will crank up the opacity here, because when you first turn this guy on, it's kind of low, so anyway, I turn them both up just so they stand out, and I can make sure that everything is aligned for the particular time frame that I'm on. So that's the 4 hour. If I go down to the 1 hour, everything looks good there. And again, I just use this to spot check myself on where things are at. And what have we got going on here? See, that's the 1 hour. Yeah, so we're good there. Okay. And then I just simply turn him back off. So all the higher time frame imbalances are marked up. You can see I've got a daily up here. I've got a weekly down here. If we scroll down a little bit, I've got other daily and 4 hour areas down here that I've got marked up. Aside from that, what I do also, and that's usually at the end of the day when I'm done trading, when the market closes, is I will mark up the previous day highs and lows from that day. And you can also see, I need to go back and mark up some more previous day lows here because we're continuing down. But you can see on the higher time frame or the higher dates, I've got PDH from March 3rd, March 4th, March 2nd, going back into February. But I just stopped extending these out because, again, if you look at the market, we're just sliding away here. So that's why I stopped doing that. And I've got to pick up with more previous day lows down here so I know where we could possibly target. So imbalances are set up, PDLs are set up. The next thing that I do, and that I would encourage you guys to do, is I'm going to switch back to the 5-minute time frame here. I would encourage you to grab this indicator here. This is the ICT higher time frame candles by Fatty, and I've got the 15-minute and the 1 hour marked up here on this chart. So this particular time frame is on one monitor, and then I've got the hour time frame on a second monitor, and on that chart is the 4 hour and the daily. So I've got a big bird's eye view of what's happening, on those higher time frames. And the reason that you want to use these is because this goes back to time frame alignment for your model entries. And if you don't know what I'm talking about or what that means, jump on YouTube, just Google time frame alignment, and there's plenty of videos out there that discuss this. Your weekly, your 4 hour, your 15, your 1. If you're looking at the daily, you move down to the hour, move down to the 5 minute for your entry. And so again, if I'm on the 1 minute, which I'm on here quite often, I'm looking at the 5 minute, and I'm looking to see what he is doing, how he's moving. Do we have sweeps of any kind? What's going on with the candle bodies, the wicks themselves, et cetera, et cetera. If I'm on the 5 minute, I'm looking at the 1 hour. Again, that goes back to time frame alignment. So again, this is ICT, higher time frame candles from Fatty. So I have them on here. And then after that, let me just jump back down here. Basically, after that, I'm good to go, and I'm ready to look for a potential entry and formation at that point. A lot of people use fair value gaps. I've used them as well in the past, but I've had more success, and I'm gravitating more towards using order blocks. And order blocks kind of go in line with the fractal model that I have been trading most recently. Fractal model is by T-Trades, and it's basically the concept of the swing point here. So you've got a candle that took out the previous candle, swept that candle, and then closed back inside. This is your ideal scenario that you want to look for here. And again, let me come down to the 1 minute. So you've got this that happened. Lost my drawing. So you've got your swing point here, and then what I'll do is I'll look to the left, and I'm looking for, this is kind of choppy all through here. I don't really like this. It can be done. I guess what I would do is I would define probably this as the change in state of delivery, and then you can enter from there. Again, the fractal model concept is from T-Trades, and like I said, it's really helped me to solidify my trading. And from there, and I'm kind of going over this real quickly, I'm not going into it in depth, but you mark up your change in the state of delivery, mark up your standard deviations, order block deviations, projections, and then you can target liquidity here, liquidity here. If you want to shoot for up here, you can. Again, that's outside of the 2.5 range. There are some people that really encourage you to stay and shoot for the 4 to 4.5. For me, it's going to depend on what the market is doing. Are we early in the morning? Are we late in the afternoon? Are we consolidating? What's going on news-wise? Is there things happening later in the week, the day? A lot of concepts go into that as well. For this, if I were to have taken this, I would have probably gotten out at the 1.5 or right up here, and just to play it safe, and then you're done. The projections really help out a lot, and they've helped me really kind of hone in on targets and where to get out at. And let's see here. Trying to get that 1 to 2 there. So that kind of lines up with your 2, your 2.5. So if you were to get in, excuse me there. If you were to enter, right after the changes of the state of delivery there, that's actually there's your 1 to 2 there. So you get in, set your stop loss, target liquidity here. Again, I'm looking to the left as well as I'm looking at the projections to see what lines up with where's the liquidity at, where can I take TP at, where can I take profit at. And a lot of the times you'll see these will line up with your liquidity areas, which is great to see. And then really that's it, guys. Like I said, the big game changer for me, I traded, this was a long time ago, but I traded the candle filter in the past, which is very similar in the sense that you're looking for a sweep on a 15-minute candle. The only difference then was I was looking for, like, say, let me jump back on the 15. You know, I would mark up something like I'd mark it up here, or I'd mark up this area. Just something to that effect, versus really understanding and looking at the individual candles themselves, and the fact that, you know, the market is fractal, and that's where T-Trades concept comes into play, is the fact that the market is fractal, and it's based on the concept that market really doesn't reverse unless there's a swing point that's there and that has been defined. And that's what this is. Let me see if I can back up to, earlier in the day here. All right, so this was one of the trade. There's two trades. This was the second trade, if I remember correctly, that I took earlier. So if you look right here, and this is what grabbed my eye, is we've got a swing that happened here. This candle came up, took out the previous candle, and then it came down and dropped. When it comes down this far, that is ideal. And then of course it keeps going from there. And what I did was basically I'm looking at, you know, what candles were affected there. So obviously these two, this is the order block. And then I set my fib projections off of that order block entry. I had my change in the state of delivery. I may be a little early with the replay here, but this is essentially what I set up here and what I saw. So as time went on with the 1 minute, you can see it played out beautifully. And again, because you're looking, you've got the swing point that's been defined. It swept the previous candle, came up and closed back in. And then you get your change in the state of delivery here. And then your projections are there, and you're good to go. If you purchase the indicator from T-Trades, it does all this automatically. Just once I understood the concept, and of course I already had these higher time frame candles, I'm just manually marking them up myself, and because I understand that how the indicator works now, and what it's looking for, so I just mark up the change in the state of delivery myself. I'm marking up the projections myself, and this is something I've already been doing for a while. So his is great. I'm not knocking it at all. I mean, the thing is fantastic. It just takes a lot of this work out of it, and it plots everything for you right there on the fly. So that was the trade that I took earlier, and I posted that on X, and that's really helped my trading. So again, that is basically what I do each day, guys. I'm looking at higher time frame imbalances. I'm looking at the daily and the weekly chart, trying to form a bias in terms of where we headed next, where's the market going. When you're down here in the 1 minute, that's great for entries, but you really need to be up on the higher time frames to see the bigger picture and to see where the market is possibly going next. So we took PDL for both the 5th and the 3rd out. We never even touched the daily. So my bias right now, again, looking at the higher time frames, and there's a lot more that can go into this. That's a whole nother video, but everything that I'm seeing, we're going to keep dropping a lot more coming up here. Again, it's NQ. It could do what she wants, but from what I'm seeing, we came up. Where did they go? The daily here. We came up and we hit this daily imbalance here. You can see we went up, but didn't close through it. Came back down, and then here we go again. So I think, like I said, I think we're gonna keep dropping some more here. So anyway, I hope that's helped, guys. All kinds of entries, all kinds of ways to enter the market, fair value gaps, order blocks, breaker blocks, whatever's comfortable for you. This is what I've found, like I said, what I've found that has worked and is working for me. Higher time frames are key. You've got to grasp that. You've got to learn that, got to understand that, and you've got to take a step out and not be in the leaves so much. You need to step back out and see the forest and kind of see where things are going and where the next draw on liquidity is. You can't really tell that, in my opinion, when you're down on the 1 minute and the 5 minute chart. You've got to step back out and see where the market's going to go next. And like I said, keep in mind when you mark up your 1 hour and your 4 hour imbalances, especially on NQ, she's really the only chart I watch, but watch how she reacts off of those imbalances. I mean, you look at this 4 hour, look at this 1 hour. Let me come down a little bit here. I mean, see, it's come down. Now we're bouncing around again. And like I said, if I were still trying to trade today, there's no way in the world I would get in this, because you've got these larger time frame imbalances, especially these 2 4 hours inside this weekly. I'm not touching that until we get out of that. So anyway, like I said, this is what's helped me, guys. I hope it's helped you. Fractal model is a game changer. If you don't understand it and don't know what it is, like I said, I'll point you to T-Trades. Look him up on YouTube and go through his videos. He explains all of that. The other concept that I love to use is profitable loser strategy. Look up profitable loser on YouTube, and his concept, and it works daily. It hits daily, like every single day almost. I would say 98% it's going to hit. I mean, it's unbelievable. And that strategy is based upon the market open, which is why I have the market open at midnight price set. That's just one indicator that does that. That's all it does, is mark up those two areas. And that's what I have it plotted each day as well. And that's based on the concept of, if the market's coming down, actually in here is a good area. Let me jump down to the 5. Once it starts consolidating like it was doing in here, that's your cue to enter. You set your fib up, go from the low to the market open. I'm going to move this just so everybody can see. And then your target is the 35 and the 23. Like I said, he's got wonderful videos on this. Check him out. This strategy hits every day as well. And I had it on my screen earlier when I was plotting one of my trades, just to see how it was going to play out, and also looking at the 35 and 23. So good. I mean, great stuff. There's a lot of great content on YouTube, but this, like I said, this is what's really helped solidify trading for me, and this is what has clicked for me. So anyway, hope you guys enjoy this video. If there's any questions that you've got, anything I can help out with, please don't be afraid to shoot me a message there, or you could reach me probably quicker on X. All right, you guys have a great rest of your week. Be careful tomorrow on NFP, and I'll catch you on the next video. Have fun, guys.